Hello traders, you're welcome to this video. In this particular video, we are going to be discussing three of the best momentum indicators. So if you have been a trader for a while or if you are new to trading, you will know that momentum indicators are important part of a trader's trading strategy. Although not everyone uses momentum indicators, but one of the benefits you get from momentum indicators is that they can help to tell you when a bearish move is strong or when a bullish move is strong. They have their advantages, right? You can use them to track the momentum of a trend, okay? And most of the times, you can use these momentum indicators to know when an asset is overbought and when an asset is oversold. So now, basically, we are going to be discussing the RSI, the MACD, and the stochastic oscillators. These are three of the best momentum indicators in the market. There are a variety of them, but we are just going to be looking at these three. Okay, so now we're going to be starting with the RSI. Let's just load the RSI to our chart. Okay, now the RSI measures the speed of price movements. Okay, it shows whether a market is overbought or oversold. As we can see, it ranges from 0 to 100. From 70 and above, this is the default settings. From 70 and above indicates overbought. From 30 below indicates oversold conditions. Okay, now how do you spot a trend using the RSI? We can use RSI to identify potential reversal points. If the RSI is above 70, it might signal a sell opportunity as the market could be overbought. Conversely, if it's below 30, it might signal a buy opportunity as the market could be oversold. So like we can see now, when it is above the 70 level, it signals a sell opportunity, saying that the market is overbought. So as you can see that when the RSI gave the overbought signal, shortly afterwards, the price dropped, right? So when the RSI is above 70, it's a sell signal. When the RSI is below 30, it's a buy signal. We can see here, as the RSI dropped below 30, it signaled an oversold situation, and you can see that price bought shortly afterwards. Okay, now how do you avoid common mistakes? One of the most important ways is do not rely only on the RSI for your entry and exit. You should at least combine it with other technical tools like support and resistance levels, candlestick patterns, okay? But now, basically, the signals are easy, okay? When the RSI drops below 30 and begins to point upwards, you can enter a buy trade. Yes, it's a signal for a buy. And then your stop loss could be below the nearest support level, just like below here if you enter a buy here. And then your exit signal using the RSI could be when the price enters the overbought. That should be somewhere here. Or enters overbought and begins to point downwards, that will be somewhere here. So we would have exited around that point, would have got about 100 pips, right? But make sure that you always use proper risk management, okay? And try to always combine the RSI signals with other technical indicators. You can use support and resistance levels also to determine your exit, okay? As the RSI had given you a buy signal, you can also decide to exit your buy trade after the price got to the resistance level. That's also a way that you can use to know when that move is possibly ending, right? Now, let us look at the second indicator on our list. I'm just going to remove the RSI. The second indicator on our list is the MACD. Let's insert the MACD onto our chart. Okay. Now, the MACD, as we can see on our chart, is also a momentum indicator. Okay. And the MACD consists of both the MACD line and the histogram bars, and it also has this zero line here. Now, how do you interpret the MACD signals? Basically, if the MACD line crosses above the zero line, it's a buy signal. It's as easy as that. And when the MACD line crosses below the zero line, it's a sell signal, right? But it's not just only about that. To also show a strong momentum, the histogram bars respond. When you see long histogram bars, it shows a strong bullish momentum. when you see short histogram bars, that is long histogram bars above the zero level, strong bullish momentum, long histogram bars below the zero level, strong sell momentum. Short histogram bars show weak momentum, and during that period, most of the times you might see the market ranging. Do you see? Or without a clear trend, right? So now when you see a crossover happening here, you can just enter a buy. Remember that using support and resistance levels is also important for additional confirmation, right? So now as you can see that as the MACD line crossed above the zero line, about that point the price of the asset was around a support level, right? In addition to that, we even had a dragonfly doji there. So it is extra confirmation. Yeah, you can also use candlestick patterns for additional confirmations, right? So that was like a very, very good opportunity to buy, because we had like multiple confirmations. We had a candlestick chart, a candlestick pattern. We had a support level there, and at the same time the MACD crossed above the zero level. So we would have entered a buy and would have set our stop loss. If you want to start stop loss, since we had the candlestick pattern, you can set your stop loss right below that pattern, or you can just decide to set your stop loss below this swing low, okay? And then for your take profit, you can consider the resistance level, or you can just wait for if you decide to wait for an opposing signal from the MACD, can you see that you will end up losing out your profits? So for the MACD, I will not exactly advise that you use the opposing signal to exit your buy, or the opposing signal for a sell to exit your sell. So instead, you can just wait for a curve from the MACD line pointing downwards. When the MACD line has crossed over the histogram bars, you can see that around this place the MACD line was moving inside the histogram bars, but when the MACD line crosses over the histogram bars, you can use that as your exit signal. Okay, now that's for a buy, right? Now for a sell, let us consider a sell. We can see that right after this crossover, the market sold. So for a sell, you can see that right after the MACD line crosses over the histogram and began to point upwards, you can use that as your sell. So we would have exited our sell, as your exit signal. We have exited our sell somewhere around here, and you can see that the signal was even late. You would have given back to the market some of your profits if you had exited around here. Imagining entering around here and exiting around here, you would have lost like almost half of your profits. However, if you are using support levels, that's the reason why you shouldn't just rely only on the MACD indicator. Always use other indicators for confirmation, right? For additional confirmation. So you can see now that if we had used the support level, we would have exited our trade here. But if you had used the MACD for your exit signal, you would have exited here. It's not like it's bad though, but you would have given the market some of your profit back, but you would have still been in some good profits though. That would have been like 41 pips or so. Okay, so that is it for the MACD, right? Let us look at the next momentum indicator that we have on our list, which is the stochastic oscillators. Let's just add it to our chart. Okay, now the stochastic oscillators, they are also one of the most used momentum indicators in the market. The stochastic oscillators, as we can see, obvious on the chart, the stochastic oscillators shows us when the market is overbought and when the market is oversold. We can see when the asset is overbought and when the asset is oversold. The stochastic oscillators are very, very easy to use. Yeah, just very easy to use. Basically, it works with the crossover strategy. You can see that the stochastic oscillators has two lines. The two lines, which are the main line and the signal line. Yeah, it's very, very easy to. And now the stochastic oscillators is also measured from a scale of 0 to 100, as we can see, from 0 to 100. Readings above 80 indicate overbought conditions. Readings below 20 indicate oversold conditions, right? Now, when you have a crossover in the overbought region, a bearish crossover pointing downwards, it indicates that the market is about to sell. Yes, it indicates a sell signal. So you can decide to enter a sell trade set your stop loss above the swing high, or you can use resistance levels, set your stop loss above the resistance levels. For your take profit, you can consider support levels for your take profit in a sell trade, right? Or you can consider using the reverse of the signal. For a sell trade, you can exit your signal after you have a bearish it's oversold condition and a bullish crossover. You can use that to exit, right? So I've been exiting somewhere around here. Now for a buy, when you have the stochastics in the oversold region and you have a bullish crossover, you can use that as a buy signal, right? Enter your buy trade. You can set your stop loss right below the previous swing low. You can consider using resistance level for your take profit, or you can decide to wait for the stochastics to enter the overbought region and begin to point downwards, right? So this place would have been a good place to exit, though. It would have been a good place to exit our buy. On the other hand, you would have just decided to also exit at the resistance level. So either ways, you caught some good number of pips. If we had exited at a resistance, that would have been like 71 pips. If we had exited at the sell signal from the stocks, we would have exited about 83 pips, right? So that's just it. It's very, very easy to use. Try as much as possible not to use the stochastic oscillator in a high volatility market. The reason is that it can give you conflicting signals, okay, so that you don't get caught in fake moves, right? So try to also confirm your signals with candlestick patterns, with support and resistance levels. Basically try to use other indicators to also confirm your signals from the stocks, right? So now we are done looking at the three best momentum indicators and how to spot entry and exit, signals with them, how to spot buy and sell signals with them, how to enter and exit with them. Okay. However, a final tip is that using one momentum indicator is good, but combining two or more indicators can actually give you stronger confirmation of trends. Yeah, it's just a common fact, right? For example, if both the RSI and MACD suggest a bullish trend, the chances of a profitable trade are higher. Let's just consider that. Let's just look at it. Let's just look at it very quickly, very briefly, right? Very briefly. Let's add on the three momentum indicators that we just looked at now. When the three of them, for example, give you the same signal, you can see that right at this point, the stocks give us a sell, the RSI gave us a sell, the MACD gave us a sell. When you have a confluence like that, it shows a stronger signal. So although you can use one indicator, but when you have multiple indicators giving themselves the same signal, it shows a stronger signal. Now, for example, here we can see that the MACD gave us a buy, the RSI gave us a buy, although in the case of the RSI, it was not from the oversold that it gave us the buy, but it's just that the RSI was already trending upwards, so it shows that the bullish momentum was strong. But in this case, the stochastics was close to the overbought. So it's just like we got confirmation from only two indicators, okay, because this one was very close to the overbought. So ideally, you might not want to enter the buy when you are seeing that the indicator is in the close to the overbought already. For the RSI, you might also consider not entering, but for the fact that it is trending upwards, because one thing with the RSI is that when it is trending in a direction, it's showing an increasing momentum, right? So you can see right from this point all the way up to this point, it was trending upwards, showing that there was actually some momentum. But in the situation whereby it's as if it is going sideways, you see, just like how the price was consolidating here, that shows a fading momentum. So in this case, you wouldn't want to enter neither a buy nor a sell. So here we got two confirmations from two indicators, but the stochastics did not confirm. However, for the fact that we got two confirmations, at least it can still give us the go ahead to enter a buy. So basically, what am I saying? When you are using multiple indicators, you can get stronger confirmations for your entries, for your exits, right? So that's just it. And always make sure you use proper risk management, please. Do not use an amount that you cannot afford to lose, okay? By understanding and applying these indicators correctly, you enhance your ability to recognize trends and time your trades more effectively. I hope you found this video insightful. Kindly like, click on the notification bell, and subscribe for more trading insights. Cheers and happy trading.